Hi, Kevin here with Filling the Pig. Today in this how-to video, I will be showing you how to research a mutual fund, or some may refer to it as a mutual fund screening. Because there are so many different types of mutual funds, it can be challenging to figure out where to start and which mutual funds you should invest in. Screening is the process of doing some initial research on a mutual fund to learn more about it, before you make the decision to either do more research, invest in it, or make the determination that maybe this mutual fund isn't right for you. To screen today's mutual fund, we're going to be focusing on 7 key points to evaluate the mutual fund with. The first one we're going to look at is the NAV, or the price per share. Similar to stocks, mutual funds have a NAV, or net asset value. They have a price per share. So that'll be the first thing we'll take a look at. The second item we're going to look at is the Morningstar Rating. Morningstar provides a rating of mutual funds from 1 to 5 stars, 1 being the least attractive mutual fund, 5 being the most attractive mutual fund. In general, when I'm looking at a mutual fund, I'll focus on 4 and 5 star ratings for Morningstar. Then we'll take a look at the inception date. The inception date is the date that the mutual fund was initially created or started. Then we'll look at the rate of return, the past rate of return, over the past 5 years, 10 years, and since inception date. Then we're going to be looking at 2 expenses that can impact the rate of return. The expense ratio, which is the administrative charges that the asset management company that owns the mutual fund charges a shareholder of the mutual fund. In general, I look for an expense ratio that's less than 1%. Load is defined as the cost of buying and selling the mutual fund. In our case, we're going to be looking for a no-load mutual fund, a mutual fund that has no cost to buy or sell it. And then the final item we're going to look at is what are the minimums to invest in this mutual fund. All mutual funds have some minimum to initially start investing. Generally, they're $2,000 to $2,500. And then after you make that initial investment, you can typically continue to invest in the mutual fund in increments of $50 to $100. For today's exercise, we're going to be using the T. Rowe Price website. T. Rowe Price is an asset management company that owns a large number of different mutual funds. This exercise could be used for any mutual fund asset management company like Fidelity or Vanguard. But for the exercise today, we'll be looking at the T. Rowe Price website and one of their specific mutual funds. So to get started in doing this initial mutual fund screening or research, we're going to go out to the T. Rowe Price website, and you can get there by just putting in www.troweprice.com, and you'll come to the main page and you can see I'm already here. So we're going to go to personal investing over on the right here, and we're going to click on that, and it will come up to the personal investing home page, and then we're going to go up to mutual funds, and we're going to select mutual funds. And then what we're going to do is we're going to scroll down here, and we're going to go and take a look at a specific stock fund. So on the right here, I'm going to click View Stock Funds. And then initially what the T. Rowe Price website pulls up is a list of, this is domestic stock and international stock funds. And as you can see across the top here, they provide the fund name with the ticker symbol. All mutual funds have a ticker symbol just like a stock does. And then across the top, they're providing information on the different types of annual returns and the expense ratios and general summary information that we're going to talk about in just a bit here. But for our purposes, we're going to scroll down and we're going to go to PRDGX, which is a dividend growth fund. And by clicking on that, it will bring up a snapshot or summary of this T. Rowe Price mutual fund. Now, just as a reminder, any asset management company that provides mutual funds will have some type of snapshot or summary page like this for the mutual fund so that you can do research. So although we're using the T. Rowe Price website to do this, if you're using Fidelity or Vanguard, you could accomplish the same thing when researching a mutual fund. Let's start by stepping through these 7 key points that we want to evaluate when looking at or researching a mutual fund. The first is the NAV price, and in the upper left hand corner here you can see the NAV price as of 6/29/2017 is $40.33. That's the price per share of this mutual fund. If we scroll down a little further here, we'll see the Morningstar ratings, which is the second key point that you want to evaluate when looking at a mutual fund. As you can see, the overall rating for this mutual fund is 5 stars, the highest rating that Morningstar provides. And if you look below that, you can see over the course of 3 years, 5 years, and 10 years that the rating from Morningstar has never been lower than 4. So from Morningstar's perspective, this is a good mutual fund. The next area we're going to go to is the inception date and the rate of return. And if you scroll down a little further here, in the Snapshot tab, T. Rowe Price will provide you that information for this mutual fund. If we look here, the inception date is December 30th, 1992, so this mutual fund has been around for a while. And if you look just above that, the inception date rate of return is 9.65%. What's important about the inception date and the rate of return is it provides you with some perspective, especially if the mutual fund has been around a while, what the track record is. So from this mutual fund's perspective, the track record's been pretty solid. 9.56% is a pretty solid rate of return when you're looking at a mutual fund. We're going to move on to expense ratio and loads, and you can see that T. Rowe Price provides that information right here below the rate of return, but I'm going to show you another place you can go within their snapshot summary. We're going to go to the expenses and minimums tab, and in the expenses and minimums tab you can see over on the left hand corner here, or the left hand side, that the gross expense ratio and the net expense ratio is below 1%. It's at 0.64%. The importance of the expense ratio in a mutual fund is that the higher the expense ratio, the more likely that expense ratio is going to eat into your rate of return over the long term. So in general, most people, when they're evaluating a mutual fund, will recommend that you start evaluating mutual funds with an expense ratio less than 1%. To the right of the expense ratio information is the load information. Front-end load, back-end load. Front-end load is when you purchase the mutual fund. Back-end load is when you sell the mutual fund. In this mutual fund's case, there is no charge or load for purchasing or selling the mutual fund. So this is considered a no-load fund. Loads are important again in relationship to rate of return. If there is a load on the front end or back end, that eats into your overall rate of return for the mutual fund. And finally, to finish up the quick evaluation on this mutual fund, we're going to look at the minimums. To open an account for this mutual fund, you'll initially need to invest $2,500. And then to add to that account, you can invest in $100 increments after that. Now, T. Rowe Price also offers an IRA option where the minimums are a bit lower on the front end. If you open up an IRA, it's only $1,000 and then $100 to make additions to that IRA account. So there are the 7 key points that we talked about evaluating a mutual fund for. But what's it all mean? Well, in summary, this mutual fund looks like this. First of all, the expense ratio is low and there are no loads. This is a no-load fund for buying or selling the mutual fund. When we went back, if we go back to the snapshot view, we can see that the rates of return are pretty impressive even since inception being December 30th, 1992. And of course, this mutual fund has the highest Morningstar rating, which is 5 star. So on initial evaluation or blush, if you were looking to invest in a mutual fund, this might be a good one to start out with. Now, T. Rowe Price offers additional information. Across the top here, you can see these other tabs here. The Objective tab will provide you with information in regards to what the fund's strategy is in terms of making money. So if you wanted to do more research, you could look in this tab and learn more about the actual fund. Performance will provide more in-depth information on the return and some comparison information with other mutual funds. And you can look at composition to see what stocks make up this dividend growth fund. And if you look here just under the composition side, you'll see that the 10 largest holdings in this mutual fund are companies like Apple, JP Morgan, Microsoft, and PepsiCo, just to name a few. There's a wealth of information at the T. Rowe Price website where you can get additional information on a number of different mutual funds. And as discussed before, whether it's Vanguard, Fidelity, or any other company, if they have a mutual fund that they're offering, typically they're going to provide some type of summary information like this, and then allow you to dig deeper into the mutual fund before you invest in it. That concludes this quick training of how to research or screen a mutual fund. I hope you found it useful. If you're still interested in learning more about mutual funds or stocks or investments, be sure to check out my ebook, Simple Investing. It provides a simple and question-answer format so you can learn more about 8 of the most common investment vehicles in a simple and practical format.